This is the weekly review for the week of September 5th to September 9th, as well as this week's Sunday preparation. So, coming into this week on Monday, we had a bank holiday, so I didn't do anything. I just let this day go by, and I went back on the charts Monday night to see what I would be anticipating for Tuesday. And I noted this H1 fair value gap up here, as well as the OTE of this range. And pretty much what I was anticipating was Monday high to be rated on Tuesday and to come back up into OTE up here, into the fair value gap, and form some type of SMT with GU. And that's exactly what ended up happening. And the reason I was bearish was because I was thinking that GU wanted to take its 2020 low here. So we did end up playing out as I was anticipating on Monday, and we got a mentorship set up here with the SMT, displacement down, and then the entry at here at 455. Now we didn't come up into premium, so I did not like that. Now on the M15 is what I was really watching because I do not trade London session. And we had this break in market structure displacement here. So in New York, I was anticipating to get an entry in the breaker, but the entry eventually came in the interim session here, and obviously we can't enter between 5 and 7 a.m. So that's where the entry happened, and then we started trading off. So I kind of figured that in New York, I wasn't going to be able to get an entry up here, which sucked because I was pretty much anticipating exactly this. So we had the low-hanging fruit break in market structure on M15. So I was then looking in New York for an institutional order flow entry drill, and I set a limit here in this M15 for Valley Gap. We never came back up there. We only came back up into this M5 for Valley Gap, which I wasn't even considering because this was an M15 break in market structure, which is why I was focusing on the M15 fair value gap here. So I got swerved on this entry, and we came all the way down to take previous day's low here. Now, on the M5, we also had a power 3 entry, which I noted in my journal. Now, I was eating lunch at the time of this trade, but I think that due to all of the confluences, I would have taken this because we had this SMT with previous day's low on GU, and we took the liquidity from previous day's low. Very clear and clean displacement with FVGs created. The only thing was obviously the break in market structure was only a wick and not a closure, which usually I don't like. But due to all of the other confluences, I think this entry here on the M5 for Valley Gap would have been logical. Stop below here, and then targeting just the mean threshold of the daily range using the daily power 3 candle logic. So this was a nice trade that I noted in my journal. Now coming into Wednesday, my bias was still bearish because GU had yet to take the 2020 low. So on EU, I was watching that we came up here into premium of previous day's range inside of fair value gap and traded off of it, creating displacement down. Now, I didn't necessarily like this kind of consolidation here. There was no like clean and clear displacement down like we had on Monday. On Tuesday, right? So this just no-brainer displacement compared to this choppy price action. And just to note, right, I ended up taking a short here, but that's why this didn't play out. Just looking at the two different types of price action, right? This is not what we want to be in. But the reason I took the short here at this M15 breaker, right, is because I was watching GU. I knew that I wanted the 2020 low. I set a limit here because here was the mentorship setup where we took Asia high, broke market structure, clean displacement, fair value gap breaker, and the entry comes in not in a kill zone, so we can't take this. Same thing happened with fucking EU on Tuesday, right? So I was watching this displacement range for an institutional order flow entry drill, low-hanging fruit breaking market structure. I set the limit here at the mean threshold, got swerved, and then we just were consolidating here. So then I went and looked at EU, and because I got swerved on GU, I just placed a limit here at the breaker, actually at the mean threshold of the displacement range from here to here, and I got in right here. What was this? Oh no, this was the trade here. This was the other, that was a long, my bad. So this was the trade that I took. And I was targeting previous day's low because I thought that GU wanted the 2020 low. GU did exactly as I was anticipating. We never really came up. If we just tapped, no, yeah, we didn't even come up into premium here. But GU did take 2020 low. EU did not take previous day's low as I was anticipating. And the reason for that is we had this SMT with previous day's low, Tuesday low here. We had this SMT. Initially, when I took the short, I thought that this SMT would just, this was just a temporary SMT with EU lagging behind GU. But once I saw this displacement candle here at 9:15, the closure being 9:20, I said, okay, I want to get out of the trade. So I was just watching this to see if we would come down into, come back down to my entry so I could get out at break even. And we never really did that. So I took a loss here. And at the same time, GU did take the 2020 low. Now, we formed a very clean long setup here, but I was not really paying attention to this live because I was trying to just get out of this trade, and that's the only thing that I was thinking about. And we formed this, and I was just totally blindsided to it because I wasn't thinking about it. But we had the SMT with previous day's low, clean displacement up, no question about it, come down into the fair value gap and discount, targeting the high of the day here, London high. A very nice trade here, like that. So, but at least I did recognize right at this candle, I said, oh fuck, I'm on the wrong side of the market here when I took a short at this breaker. So that was at least good that I noted that live, or I was aware of that at least live. In terms of this entire range up, it wasn't something that I was anticipating. So I pretty much shorted just as price ended up reversing for the week because Wednesday formed the low of the week. Now, coming into Thursday, what I was looking at is I switched my bias bullish, right? Because we took this, all of this high time frame liquidity, previous month's low, and we formed an SMT here on the daily with Tuesday low, Wednesday low, and more importantly, we formed a swing low on the daily, right? Higher low here, higher low here. And on the daily chart, we see this high resistance liquidity run with this low and a lower low, and then this low resistance liquidity run up here with this lower high compared to this. So on Thursday, I was like, all right, we're going to come up for these highs on the daily chart. And Thursday, I was looking for, right here, I was looking for a long. Now, my bias turned out to be right, but I got in too early on the trade. And the reason for that is because I was watching this price action here prior to London. We had high impact news at 8:30. This was the ECB. They were changing the interest rates. They raised interest rates by 0.75 basis points. So prior to this, I saw we had a mentorship set up here in London with SMT, with Asia low on the dollar index. Came up here, broke market structure, didn't come down into discount, unfortunately. But we now took, I believe this was London high. Yeah, London high here. So traded up, and we ended up forming this H1 order block. And based on the bias on the daily chart, right, the fact that we had that SMT with Tuesday and Wednesday and the swing low formed on the daily chart, I was very confident in the bullish bias. So I didn't really know exactly how low price wanted to retrace. So I just ended up setting this limit at the H1 order block that formed here with my stop below London low because we had this SMT with the dollar index. And everything was going well in terms of we retraced here, and then we started consolidating. And then when this this candle up here, this move up at 850 happened, I was like, all right, I think I'm on the right side of the market. And then, of course, we nuked down. And the reason for that was because we came down into this low resistance liquidity run here from Wednesday. And then this is also discount of the range from that low to that high. So this was the H1 order block that I was longing off of. And I was longing in premium, yeah, right, where we want to long in discount. But this was just one thing that I missed. Just one fucking factor that I missed. I had everything else right, but it was just this. I thought that this low was going to hold because of the SMT that we had with Asia low. But we came down here into this H4 fair value gap discount, and then we went up and took, as I was anticipating, this low resistance liquidity run on the daily chart here. So then coming into Friday, I saw that we formed the high of the week on Friday. So when we formed the high of the week on Friday, I'm looking for a short just based off of the power 3 of the weekly candle. And so we rated the low resistance liquidity run. We also had a SMT with GU and DXY of that low resistance liquidity run. And we had a mentorship setup here form. Entry again on the M5 here happened, not in a kill zone, so we can't take this. Literally every fucking day this week, we've had the entry not in a kill zone. So coming into New York session, I was looking at the same thing. We had that low-hanging fruit break in market structure here. I set a limit at the fair value gap for an institutional order flow entry drill, and I was targeting this H1 fair value gap here, low resistance liquidity run. Price ended up delivering, but I didn't get an entry here. And the same thing actually happened on UCAD. So I was looking at UCAD just because Friday had high impact news. And we formed the same setup that we did on EU, just the reverse. We came down into this H4 order block here. And all of this is a fair value gap, low resistance liquidity run, as ICT was talking about in the 2016 mentorship videos that he's uploading now. So I was looking at that. I said, all right, price is definitely going to come up here and take out London high. That was the target for my trade. And we were below the 12 a.m. opening price. We had M15 break in market structure here, breaker order block, fair value gap, and I just set my limits here at just right above the big figure, I think, the 1.3 big figure. I set it a little bit higher than that, and price came down in here and swerved my entry by a few pips and then went right to TP. We never made it inside this M15 fair value gap, never made it into discount. So really, even though the setup itself played out in terms of the logic, ICT said we always want a long in discount, and this never came to discount. We did come into this M5 fair value gap here, that's denoted by these dotted lines, but never into the M15 fair value gap or discount, right? So the logic did play out, but the entry didn't play out. And then I was looking at a short setup here just based off of the daily power 3. We had this clear displacement down here at 10 a.m. So it's highly likely that the high of the day is formed. We had this SMT. We took London high, clean displacement down, no negotiating. That's clean and clear displacement with a FVG formation breaker here. And I went short at the top of the fair value gap, and I was just targeting these equal lows here and this M5 fair value gap here. Big figure level, the 1.3200 level. And I got into this trade here, and we just chopped around right at like 12:30-ish. I just cut the trade at break even, and right before the markets closed for the week, actually that was not my TP. This here, right before the markets closed, we hit the TP. So I don't really know what to say. This was definitely a very frustrating week, and the fact that I got the bias right a lot of times, but I was either knocked out of the market because I entered too early or my limits were just swerved. So yeah, in terms of the bias, also for US 30, that was also the swing trade that I had on that. I had to exit it at break even, this trade here. So this was non-farm payroll that last Friday. I was looking to take a 50% partial here at the daily fair value gap because I had a feeling that we were going to retrace after we dug into that. The only problem was we dug into that in Asian session and I was asleep and I could not take a partial there. So I just ended up holding the trade to see if we were going to kind of come back in here, and we never did. I should have closed the trade on Thursday because why we formed a daily swing low here with Monday, Tuesday, and Wednesday inside a daily fair value gap. So that means that it's highly likely we're going to reverse. So I should have just collapsed the trade at like 1R here on Thursday. But I did not end up doing that. I noted that in my journal that I should have done that in terms of the logic why. So I cut the trade at break even here on Friday. Now, in terms of where I think indices are going to go, is really this fair value gap up here and the order block. So even though dollar kind of looks bullish, it looks both bullish and bearish because we have this bullish SMT with EU and we broke market structure here and we're just consolidating, but at the same time we took liquidity from the old high on September of 2002 and we broke market structure down here. So we have this fair value gap here that price could come into and reverse down, but at the same time we have this bullish SMT with a bullish break in market structure on H1. So in terms of DXY and foreign currency, I'm not exactly too sure on the bias, but I'm leaning that dollar is bearish just because indices look very clear that they want to retrace up into this fair value gap and potentially this order block and then trade lower, because the higher time frame is still, in terms of like the macro environment, it's still bullish dollar, bearish everything else. So what I'm probably going to do is I'm probably just going to get another swing trade entry on here. I still have these two positions on. This one I took that 50% partial here, but now I just have a 0.01 lot on both of these. So I just moved the stop to break even because I can't take any more partials. So I'm going to probably have an entry above this swing high here, and then probably another one at the order block here, just for a swing trade. And then I may look on like the H1 or H4 if I could get a lower time frame entry if we form a mentorship setup in here in terms of like rating this high with SMT or something like that. But yeah, in terms of swing trades, those are the two trades that I'm going to put on here just with the daily chart. And I don't think that this high should be violated if we're going to continue to be bearish. So really the bias for this week is what I'm thinking is bearish dollar and then bullish foreign currency as well as indices, just because of what I'm seeing on the indices chart. So I'm really just going to let price action play out on Monday and see what happens, right? Because EU does look bearish because we have this SMT displacement down here, breaking market structure, right? So we could just like come up in here and then fall off, but I'm not sure. So I'm just really just going to wait it out and see what Monday price action gives us to determine what I'm going to do for the rest of the week.